Right here, and welcome to my YouTube channel. This is a video on how to mark out break of structure and change of character correctly. I've seen a lot of YouTubers teach how to mark out break of structure and coach in incorrect ways that might affect your trading and make you lose money thinking your system is bad, but you missed out on the foundation, on the basics. So you need to understand that what you're doing here is you're trading candlesticks, and before trading group of candlesticks like we have here, you are trading individual candlesticks in itself. So what I'm trying to say is that before you're trading two or more candlesticks, you should be able to trade an individual candlestick, because it's still all price movement. Either the price is going up or the price is coming down. So that being said, let's move on to the real deal. The first thing you need to know as a trader that wants to actually make profits in this market and make withdrawals consistently. So we'll be trading on individual candlesticks today. To get started with that, you need to firstly mark out your break of structure as one candlestick to another. How do I mean? When you have one candlestick going up here, then there's another one with a full body close. This is already a break of structure. Forget the misconceptions out there. This is how to trade. So when you have one candlestick going up to another one like this, we have another break of structure. This should be clear to you now. It's as easy as this, but a lot of traders get misconceptions on this thing, and they try to complicate things. But looking at the market this way will improve your trading. Trust me, it will improve your trading. So when you have a candlestick that goes up like this, then there's another candlestick, let's say like this, but it doesn't close with a full body close. It closed only with a wick. You can't call this a break of structure. This is an invalid break of structure, because price only visited this area then closed below. That's not a break of structure. So let's go to the charts where I can show you this. So for example, from this candlestick to this candlestick, it's a break of structure. How? We have price closing with the body of the candlestick. You can mark this out as a BOS. So from this candlestick here to this next candlestick is also a break of structure. From this candlestick to the next candlestick is also a break of structure. But from here to this next one is an invalid break of structure. I should have a template here. Invalid break of structure, right? So you need to take note of these things before you start trading. On the grand scheme of things, like trading so many candlesticks, you need to learn how to trade individual candlesticks, and this will give you a real edge in the market. So for a change of character, right, this one now is for change of character. When you have one candlestick like this to the next candlestick, you have a break of structure, and we also call this a complete trading range. One candlestick to an order is a complete trading range. That will tell you either the market is bearish or the market is bullish. When you have just one bullish candlestick, you can't say the market is bullish, right? But when you have two bullish candlesticks with a full body close just above the previous one, you can come to a conclusion that this price action here is bullish, and you can look for buys within this price action. So how can we say the market has changed character, has changed market structure? It has shifted to a bearish structure. You have to see price do what we call You have to see price go below this low of the lower candlestick. So when you have break of structure, before you can say market has changed character, you have to see price break below this candlestick low here. Then you can mark it out as a change of character. So let me show you an example on the charts. So let me show you an example on the charts so you can see how this is applied. Okay, so generally we are in a downtrend here, right? And price doesn't move in a straight line, it goes up, down, up, right? So price went down, here, went up. So before price goes up, it has to change character. We know it's in a downtrend generally, right? But before it starts going down from this little uptrend here, it still has to change character again. For every direction the market faces, there was a change of character just before that price direction. So you can see series of break of structures here. break of structure, break of structure, right? Then let's say break of structure. This is the low. Let me mark this out with my line 2. So this is a break of structure. This does not this from here to here is not a break of structure. But when you extend it to the next candlestick, you see it's a break of structure. It's a break of structure. And where is the low of this break of structure? This is the low. This is the low. How is that the low? We have this, the low, the high. Then we have this break of structure, the low and the high. Now we have this. This is the low and the high. So before we have a new break of structure, price needs to go down and break above for us to have another BOS. But right now, price didn't break above. What did price do instead? Price changed character. There was a market structure shift. So how did we get that? So after this low from our trading range, we have this and this. This is our complete trading range. Then this is the low that price has to break for it to be a change of character, which it did. I want you to see what price did after going below this low. Yeah, price price simply just started going down. Price just simply started going down. So after this change of character, what did price do? It went up a little bit, then went down again. Went up, went down. You need to start seeing this on an individual scale on the markets. Let's take this up a notch. When you mark out one candlestick to another on the higher time frame, just like I am in now on the daily time frame, right? You can then go to the lower time frames to look at what other lower time frame candlesticks are doing in your range. I told you that marking out one candlestick to another is a complete range. Why am I not just marking out from here now? Why am I not just marking out from here? From here to here. It's because this specific candlestick here did not have anything that broke it except when price went down and broke above it. So everything in this place is internal break of structure, and when it goes above, you can call it the external. That's why when you have something like this, right? Break, invalid break. Then you have something like this. This is a sell candlestick. Then you now have something like this, a buy, then a complete buy that breaks above this, that breaks above this high here, right? Suppose on a normal case you're supposed to mark this break of structure new candlestick, but no, don't mark it out like that, because this specific candlestick is inside this break of structure. So that's what we have here now, like this, and that's what I'm trying to explain to you. You don't just take the break of structure like that except it's clear to see and use. For this case, it's not as clear as the way I taught you earlier. So we will not be taking this low, we'll be using this low instead. We'll not be using this break of structure, we'll be using this break of structure instead. But for most cases, you're just going to have just one singular candlestick and break of structure, your low, your high. That will be very straightforward. Those are the ones you should be looking out for now. Just for example cases, that's why I'm using this one now. So as I was saying, the hint I was about to give you is that this is a complete trading range that we have here from one candlestick to another. Then when we go to the lower time frames, right, you can see the magic the candlesticks has been doing and how you can take trades from this whole range. Can you see it? So within this whole range now, taking trades from here buys obviously would give you high probability setups. Why? Because the whole candlestick range that I'm trading from is bullish. The trades I'll be taking from this whole range will be bullish. So you have to keep this in mind to be able to trade correctly. You have to keep this in mind. But for now, this will be the end of the video. Stay tuned to my page. I'll be teaching next on how to take entries using this simple system that I've taught you. And using this simple system, you can take your win rate up a notch. I'll be dropping some trades that I've taken using this system profitably this last week and over the years. So just stay tuned to my page. Nice having you around. Peace out.